Hello everyone, and welcome to this Australian Broker special panel discussion where we're featuring Helia, one of Australia's most innovative players in the mortgage landscape. Today we'll be hearing all about lenders' mortgage insurance and how it can provide critical assistance that enables more Australians to achieve their home ownership dreams. We're privileged to have Strachan Taylor, Strategic Partnership Leader at Helia, with us.
Hi, Bennett. Hi, everyone.
Hi there. Strachan will share insights into the company's approach, joined by our broker participants, Christie-David, mortgage broker and founder at Atelier Wealth.
Hey.
Tony Tran, mobile banker at VOQ Group.
Hello from Sydney, guys.
Hello. And Tram Nguyen, mortgage broker at OneSite Finance.
Hi, from Surrey Hills.
Hello. Well, welcome to you all. So we'll explore how broker confidence in LMI is evolving, how LMI can be used as a leverage tool in a rising equity cycle, and how the recent LMI Let's Me In and Invest campaign has played out in the market. So first of all, over the past 5 years, what shifts have you seen in the mortgage and housing market, and how has broker confidence in recommending LMI evolved over the last 2 or 3 years as a result? Strachan, could you answer that one?
Sure. Thanks, Bennett. The first thing I'd say is the more things change, the more they stay the same, and that is the continued mismatch between demand for housing and supply of housing, which is actually seeing demand outstrip supply and therefore pushing property prices up, and they've been on an upward trajectory for quite some time. The other major change that we've seen in the last 5 years is the federal government entering the housing sort of debate and also support with their 5% home loan deposit scheme. In terms of confidence, we've actually seen an uptick in confidence from brokers in general and lenders in terms of discussing LMI as an option. Having said that, a lot of brokers and a lot of lenders still struggle, and probably more so now because they've got this additional scheme which is free to talk about, and it's hard to have a conversation about a cost of something when it's up against something that's free. And so we're working with the industry to provide a lot of support and education and tools to help those conversations.
Yeah, great answer. Thank you. All right. So where are brokers and lenders currently seeing deals fall over due to deposit constraints? And in how many of these cases could LMI realistically have solved the problem? I'd like to go to Aaron for this one.
Thanks, Bennett. Look, from our perspective, there'd really ever be a client that we couldn't help get into the property market. And the big debate is, can you try and save your way into a deposit while the property market continues to accelerate as well? And our general view of the world is it's near impossible to try and save a full 20% deposit, particularly in a growing market. One of the big cash cries that we have in our business is you're not buying a loan, you're buying a home. And an LMI, or lender's mortgage insurance fee, is simply an expense or a cost of doing business, like stamp duty, for example, or fees. When Strachan talked earlier around it being a cost or a benefit or trying to be free, well, not everyone calls them 5% schemes as well. So when we're talking to our clients and we're saying, look, get into the market, go and buy the property, don't worry about the loan. There's a real penny drop moment for them. And that's when they pound the pavement with a lot more confidence and clarity, which is, okay, lender's mortgage insurance is not the enemy. It's an enabler and an expense that's been absorbed by the time they've generally settled, or a few months later, their property prices increase in value, and they quickly forget about when we do a post-settlement call months later. They've even forgotten about the LMI fee, and they just know it's a pay-to-play type mentality.
Great, thank you. All right, let's go back to Helia. So can you talk us through the strategic thinking behind the LMI Let's Me In and Invest campaigns, and why featuring real lenders and brokers was so central to their effectiveness? Strachan.
Turning to why lenders and brokers were central to the campaign, it's critical that we have people that are actually doing this every day in the market, and it lends an element of authenticity. And look, we didn't create this campaign in isolation. We spoke to a lot of brokers, a lot of lenders to get their input and to understand how they go about having these conversations. And it was ensuring that the message was grounded in real clients and actual people have actually had a conversation with and they've helped. And that was all real. And so these were people that have been struggling to get into the market or struggling to buy a house and were able to do so utilising LMI. And that just really added an element of reality and authenticity to what we were doing.
Good, thank you. All right, so research shows that many brokers find it challenging to clearly articulate LMI's costs versus benefit. So how are you helping them with that conversation? And do investors view and use LMI differently from first home buyers? What's your experience been, Strachan?
Yes, it is challenging. As I said earlier, it's when you've got a cost, and you've got to understand a borrower is sitting there, especially first home buyers, and they come in looking to buy a house with almost zero knowledge. A lot of it's informed by, I would say, sources that probably think they know better but don't. And as they work their way through this, they just see cost after cost after cost, and the runway to get there gets longer and longer. I mean, in Sydney, I think to save a 20% deposit has been estimated on an average wage to take 14 years. And so they're quite disheartened, right, in terms of getting there. And so what we're trying to do is to help brokers and lenders, lead into those challenges and put a positive spin and say, hey, we've got some solutions for you. And so education that we provide, we've got lots of tools and resources and fact sheets and stuff that helps brokers and lenders sit there with their clients and have an enriched conversation and give them hope. And that way we see that, one, you're helping brokers and lenders write more business, right? And also you're getting more people into property.
Good, thanks. Okay, Tran, what's your experience been?
Thanks, Bennett. In my experience, I found that articulating the cost versus the benefit of LMI used to be much more challenging, especially around 5 to 6 years ago. A big part of that came down to perception. I think the term LMI itself somehow can feel really intimidating or negative to clients. However, the past few years, though, the conversation has become easier. We now seeing alternative solution in the market. For example, deposit boost products or low deposit options, just as little as 2%, often framed as a risk fee rather than LMI. It's essentially the same concept, but the different terminology has helped shift somehow clients perceive it. And for me, to make the conversation clear and tangible for my clients, I usually break down the number. I typically use an Excel spreadsheet to show here's the purchase price, here's the loan amount, LVR, LMI costs alongside different scenarios. And this helps my clients, both first home buyers and investor, understand the opportunity cost. In many cases, paying LMI allows them to enter the market sooner. In terms of mindset, I found my investor client generally view and use LMI very differently from first home buyers. The investor clients tend to see it as a strategic tool to accelerate their portfolio and more comfortable leveraging it. However, first home buyer, on the other hand, are more cautious and emotionally driven. So the key is education, helping them see LMI not just as a cost, but as a way to access the market earlier and potentially get ahead in the long run.
Yeah, great. Thank you. All right, Aaron.
Yeah, thanks, Ben. Look, I'm a little bit more direct in the sense that I don't give our clients an option. I'm like, look, LMI is simply a cost of doing business. Like I said, just like stamp duty. I look at if a broker has an indifference or they're against paying LMI, that's your opinion. Yeah. But don't push your opinion onto a client. Give them the choice, give them the option. They're the ultimate ones paying the LMI premium, right? So when clients come to us and said the last broker said the LMI you should never pay, or they've said you need a 20% deposit, or their parents are saying they need a 20% deposit, but they don't have the banker mum and dad, well, you've really got two options. You keep trying to outsave the market with a deposit, but like Strachan said, it's 14 years later. Over that 14 years, you missed out on paying down your home. You missed out on the capital growth of your own home, for example. You've now rent has gone up, and and by the time in 14 years, property prices have maybe doubled or tripled. So, and you can almost be a little bit playful in that sense, going, well, you tell me what the benefit is of trying to save for a 20% deposit. And by that stage, you've saved it. Where do you think property prices will be? And I think once you can have a good, robust discussion with a client like that, and you almost have a lot of confidence, one, in the ability, but two, in the knowledge of the product in itself, the client's going to feed off that energy. And they're going, yeah, I can absolutely see it. This is a fallacy that I've got to save for a 20% deposit. And anyone, I'd kind of challenge any broker to say, if you hold on to that belief and you're going to die on that hill that a 20% deposit is the only way to get in a property market, I've almost got to question your ability, as a mortgage broker to go, are you actually giving your clients choice and insight and expertise? Because I don't think you're doing them a favor at that point.
Okay, great. Some good answers there. All right, so let's address the elephant in the room. What are the most legitimate criticisms of LMI? And in what situations does LMI genuinely not make sense for a client? And how should brokers and lenders respond transparently in those cases? So, Aaron, let's go back to you for this one.
Look, you can't sugarcoat it. It is a fee. So, like we're saying, it's a cost of doing business. What options do you have if you don't have, banking mum and dad, or you don't have, the ability to adjust your income, where you can just sit out of the market and then you can't complain if you're not willing to pay the LMI fee? That's the long and short of a person who I feel, Bennett. Now, can we then start to go through and have a discussion around, well, if you're at a different deposit amount, whether it's a 10%, 15%, 12%, whatever it's going to be, and that changes the LMI premium. All right, great. We've got some clients that don't even know they're available to get LMI waivers, like your accountants, your medical professionals, legal professionals, and you can have a discussion. So many times we've had that where they didn't even realize that was an option for them. Or it's, hey, get into it, and then we can get the property revalued, and you might move out of a higher rate, being over 80%, for example, over 80, 90%, and we get the property revalued. And again, what we're saying here is have choice, have options available to you, but we're led with strategy. Yeah. And so we're not selling a product on rates or fees. We're going, the outcome is you want the keys to your own home. Here's an option to make that happen sooner, because property prices, from what we're seeing, continue to do anywhere from 7 to 10%, compounding over year on year, but your income and your savings aren't compounding at that rate as well. Yeah. And like I say, you can call the elephant in the room, you can call it an expense, mate, you can't fight stamp duty. That's a government clipping the ticket there. And we're just saying this is simply another expense on the journey. Strap in and pay it.
And Tony, so what do you think is the elephant in the room, and how should brokers and lenders respond transparently?
Yeah, of course. Thanks, Bennett. So I guess the elephant in the room and the common criticism of LMI is the misconception and the stigma around it being another cost in the transaction that often already has so many fees and costs. So I think this is where brokers and lenders can come in to acknowledge and reframe the perspective that it's a positive cost to enable them to enter the market sooner versus waiting years and risking higher prices, like Aaron just mentioned. So another legitimate criticism is when people hear the word insurance, and with LMI being an insurance that doesn't benefit the client directly, it is a fair point to criticize, why am I paying for this, right? So this is where we can be transparent in the scenarios and explain to the client that although it protects the lender, when we shift the focus, we can talk about what this product enables them to access earlier for their goals and for their families.
Okay, Tram, what do you see as that when LMI doesn't make sense, and how should brokers respond transparently?
Yes, there's definitely some scenarios where LMI generally doesn't make sense. For example, if a client is very close to a 20% deposit and just need to wait a little bit, like short period, to save the remainder, or if they can seek the cash gift from their family. Similarly, if their servicing is already tight, taking up on a higher loan amount plus the LMI could put them under unnecessary financial pressure. So that's when I think LMI doesn't make sense. And it may not suit clients with a short-term hold strategy where LMI could be a big upfront cost, and it's harder to justify the upfront cost when they plan to sell the property in a shorter time frame. So I think it's just more about positioning LMI as an option, not a default solution. Because if it doesn't align with the client's goal, financial situation, or their risk appetite, we are always upfront about that and guide them toward a strategy that does. And that's how we build trust and long-term relationship.
Just on that point, Bennett, if your broker's talking to a client around the LMI and it looks like it's, I don't know, let's call it $20,000 or $30,000, right? But then you break that into a monthly and you go, hey, here's how much it's going to cost monthly. And it might be $200, $300, for example. And it almost changes the perspective for a client or a borrower to go, I'm not seeing it as a $20,000 or $30,000 outlay. I'm seeing that as an extra $200 a month. And then it becomes a little bit more palatable for someone to go, can you afford $200 a month to get into this property rather than saving an extra $20,000, $30,000, $100,000? And they're like, yep, okay, great. Let's play on at that point. And so it can be sold as a upfront high ticket item, or it can go, hey, this is what equates to monthly or even weekly. And then it kind of, we talked about being the elephant in the room, and maybe takes that level of fear away from a borrower to go, it's not that big, bad, expensive item that gets capitalized. It can be just broken down monthly.
In this note, I would like to add something because, for example, when people buy a property, especially when it's an investment property, they have different goals, for example, negative gearing or capital growth. So if someone said that, oh, my goals for now is just the negative gearing and I'm going to sell in 5 years, for example, then I would do the calculation to say, okay, so if you pay this much upfront cost, and then you should hold on to the property for at least X years to break even, because otherwise, if they sell in like 3 years or 4 years later, the cost not even break even yet. So that's what my point. Yeah.
Okay, good. Thanks for elaborating, both of you guys. All right, let's throw it over to Strachan. Difficult question for you to answer, maybe, but what's your take?
Look, LMI has always been part of the sort of conversation, is the way we see it, and it's not for everyone. We're the first actually to admit that. You got to understand, borrowing money to buy a house is complex. The amount of information, personal information you have to give up to allow lenders or a bank that's going to lend the money to understand you if you're a good risk is probably more than you tell your GP, right? It's a detailed analysis, and therefore, there's a raft of different options for you to solve that deposit equation. There's the government scheme for first home buyers, but that's only for first home buyers. Then there's people wanting to invest. There's people wanting to buy new properties, create wealth through multiple properties. And that's why you need an expert to help you understand that. And that's where brokers and lenders come in, because they've been in this market for a very long time and they can break it all down for you. And so it's about having LMI as part of a pathway, and there are multiple pathways into the property market. Which one's best for you? And we have various tools available to help brokers with that, but they have their own as well. So I think it's about, as Tram said, what do you want to achieve? How are we going to go about getting you there?
Right, thank you. All right, let's go back to the brokers and lenders. If there was one behavior in how and when to introduce LMI to clients that you would like to change, what should that be? So let's go with Aaron to start.
I think the behavior is, again, how we're talking, positioning it. Is it positioned as an expense or is it positioned as an enabler? And I think if we as an industry can kind of level up to go, yep, we're not going to sugarcoat it, it is an expense. But if you literally did the simulation and you go, right, let's talk about where you're looking to buy, and property prices increase by, on average, call it 7%, because that's what they've done over the last, call it 30 years. Well, what does your deposit need to be by then? And then the LMI comes into it, and you've literally just got, I know there's some awesome calculators, and that's one of the ways that we then go to effectively on-sell the idea that LMI is not the enemy, or it's not an expense. It's simply the way to get in. And I think we've all touched on it. The first home buyer comes in a little bit more emotionally charged, and when their parents are going, don't pay that, or they're being told that LMI is, a dirty expense, and you're going, well, our sentiment now feels like we're trying to sell this and there's a bit of commission breath about a broker. It's like, no, I tell our clients, zero commission breath is coming across here. We're literally looking at the ways we've helped hundreds, if not thousands of Australians get into their home by embracing LMI. So I think if you're talking about what's the one thing, I'd say the way the energy from a broker and the way they articulate it, if we can explain it very, very clearly, that's going to help a borrower feel more confident and take away that sentiment.
Right. Thank you. All right, Tony, what would one behavior that you would like to change be?
Yeah, thanks, Bennett. I think, off the bat, the first shift in behavior is that brokers and lenders just need to be brave. And we just need to not be afraid of the objections of what can arise when we start discussing LMI. Because if we don't discuss it, we've put an option off the table. So I think what Aaron said is it's almost as important when we position it. So for me, as a professional and an expert, let's bring up LMI as a first option or one of the first options in the pathways of options that we have to the client, not leave LMI like as a last option or a fallback position. Because when we get to that position, it might be a more difficult conversation than bringing it up right to the front and discussing it up front. So it's part of the education. So I think educating the client about what LMI is, and obviously, running through the compare the buy now versus the wait scenarios with the tools that we're going to go through a little bit later on is going to help with that conversation for lenders and brokers.
Great, thank you. All right, Tram, is there anything that you would like to change?
I agree with Tony to introduce LMI in the first meeting. So normally in my first meeting with the clients, I make it a point to walk through all the key finance jargon, including LMI. And if they heard of it, I'll ask them, okay, tell me how you understand on LMI so I can understand their knowledge and address any misconceptions they have on LMI. And from there, I'll give a simple, clear explanation of what it is, its benefit, and then I will revisit it in more details when we're discussing tailored solution. Because when LMI is introduced late, it can feel like an unexpected cost, which naturally create the resistance. That's why I believe it should be a part of the initial strategy conversation alongside borrowing capacity and deposit. And this way, clients see it as one of the several options to achieve their goals.
Okay, good. Great, thank you. Storm, would you agree?
Yeah, look, I would. These are all great points. The only thing I'd add is to focus on the benefit. And as Aaron said, you can break the cost down, right? Look at it, what it's going to cost you a month, and is that worthwhile paying to get in the market earlier? And we've found that with LMI, you can get in the market up to 9 years or even earlier than waiting that 14 or so years. And then what that does, it means you're actually earning equity. And we find that people that use LMI, on average, within 5 years are over $100,000 better off than those that don't. Right. So there's a real financial impact of having it on the table.
Okay, great. So final question, bringing it all back to Helia and the tools that you guys have. Let's talk about the tools that you have to help lenders and brokers elevate LMI conversations. Which of those tools, what kind of tools do you actually use most in practice, and why? So again, starting with Aaron.
Where I am in my career is over 10 years in broking. So I think what happens is you almost get so confident in what we're doing here, you lose a little bit of empathy, right? Particularly first-home buyers, because I've already bought. I'm like, just get in the market. But you forget the fears, you forget the frustrations they have when they're buying their first home. So to me, I look at the home sentiment report that Helia put out, and it will have here's all my fears, or here's all the reasons I don't want to buy. It's too expensive, rates are going up, LMI is an issue. And it's almost a gentle reminder for us, a bit of emotional intelligence, call it, that we can get into the borrower's head or a first-home buyer's head and go, okay, this is what they're thinking. Yeah, and that's great that they call it sentiment, because we can then talk about sentiment and go, okay, I can understand that you think this is an expensive item, or I can understand that you think the rates are going up. And there's ways to mitigate that. Rates are going up, go for a fixed rate. You want to try and get in the market where you don't have parents to support? Okay, great. You go and rent vest, for example, or you go and buy your first home. And for us to then just be like really just dig into the data, the research, they've obviously spent a lot of time, pounding the pavement and researching, putting some quantitative info together. That just gives us a really good source of info, creates content for us even to go, these are the objections, or this is how you can, overcome these barriers to get into the market.
Great, thank you. Tony, what Helia tools do you use?
Yeah, look, I use a combination of the tools, and look, they've done a great job in putting everything on the page so that, we can have those conversations so brokers and lenders can sit down and actually, when we have clients that are visual clients, it's really easy to pop up the web page and, show them through the calculator. So the main one I use is the home deposit estimator in combination with the LMI fee estimator tools. So the first one there is to, put it in front of them to calculate, what LMI is required today versus what the future equity looks like. And the really great thing about this, if you haven't used it, I challenge all brokers and lenders to jump on and have a look, is that there's two options when you're using this estimator, and there's an overview, and that's for your visual clients. And then you've got a detailed view, which actually gives you a table of all the numbers for, your clients that, want to see the numbers on the page, right? And same as the LMI calculator tool to work out what the estimate of LMI is. If you don't put the number in there, there's no way for you to work out if that's a strategy or an option for your client. So I feel like a combination of those two tools on the website for your visual clients puts the number there and allows you to actually have a real visual conversation with the customer. And again, you can adjust the numbers. So if I save X more, this is when I can get into the market. This is how much I can save in LMI. So customers that can see a real saving when they input a lower number or a higher deposit and it reduces their LMI, they will work harder to actually break it down and save that extra bit more and come back to you in that 3 months if that's all it's going to take them to save 5 or 10 grand in LMI. So yeah, it's a combination of some of the tools that Helia have done well to put on the website and have it available for us brokers and lenders to have conversations with our clients.
Great, thank you. Tram, how about you?
Similar like Tony, I use the home deposit estimator and LMI fee estimator a lot. Normally, I just build an Excel spreadsheet with the formula already for my clients. And then I said, okay, go on Helia website, just plug in the number because it's very easy, straightforward. And then when they, without me there, they can just put the number and then find out what's the LMI cost for this loan amount, this LVR, and they can, update the spreadsheet by themselves. And I also like the brochure that target different audience on Helia website, like first home buyer, investor with the case study that I can share with my clients. Yeah.
Good, thank you. Okay, and Strachan, a word from you.
Yeah, thanks. Look, as I said before, buying a property is complex. For first home buyers, it's scary. Tony, Aaron, Tran, these guys are experts, right? In essence, what a person wants to see is they can say, we know this stuff, we've got your back. And that's what we're about is supporting our brokers and lenders with tools and information that allows them to support the borrowers better. And we've got a whole range of tools which have been mentioned, the deposit estimator tool, there are quoting tools. There's a lot of information about what LMI is, what it does. It's in multiple languages. We've had hundreds and hundreds of utilization of our deposit estimator tool, in fact, probably thousands. Because it allows a rich conversation to be happening at the same time. The LMI in languages, we've got Chinese, we've got, I think it's Punjabi, and we've got Arabic. Thank you, Arabic. That helps break it down, right? Because if English isn't your first language, then there's an opportunity to understand it better, right? And I suppose, bringing it all together, it's about LMI. We're not about wanting to be used more often, right? Well, that would help. It's about ensuring it's used more effectively. The discussion is more rich, okay? And introducing LMI as an option or a pathway earlier, as a strategic tool as opposed to a cost, right? And you lean into the resources that we've got available. And therefore, the entire conversation shifts from hesitation and I'm just seeing cost after cost after cost to one of possibilities. right? And so on our website, helia.com.au, all those tools and information and research insights are available free of charge. And we have that open to the market so that they can have richer conversations with borrowers and make sure that whatever path they choose, it's the right path for them.
Okay, great summary there. Thank you. That concludes this Australian broker panel. Thanks to Strawn Taylor from Helia.
Thanks, Bennett. Thanks, everyone.
Aaron Christie-David from Atelier Wealth.
Thanks, guys.
Tony Tran from BOQ Group.
Thank you.
And Tram Nguyen from OneSite Finance.
Thanks, everyone.
Thanks for watching Australian Broker TV. Bye for now.